Hello, everybody. Welcome to today's live session. We haven't done this one since Thursday of last week, so we've got a bit of stuff to catch up on. Let me just put the risk warning up while I'm doing the introduction. We're going to start with oil today, because I think the move that we've seen in the last 24 hours is a really interesting one, and there's a couple of things with oil. Tomorrow, Wednesday, we have the oil inventories. So the weekly release, basically how much oil is stockpiled in the US. So we can normally see volatility off the price of oil for that. And also, we are doing our zero spread promotion on oil tomorrow. So I think we've done these every week in recent weeks. I think we did the pound last week. So tomorrow, if you're a Capital.com client, there'll be no spread on, is it both? I don't know if it's both or one. I'll check and find out for tomorrow. But if you're a client, you'll get a notification. So there'll be zero spread between 9 a.m. and 9 p.m. UK time on oil. But oil's interesting because of what's happened over the last 24 hours. So we'll have a look at that. The pound has been weaker as well as the Brexit lack of progress moves forward. And we've had, I think, some pretty downbeat stats for the UK economy, but I think that risk warning has been up long enough. So let's take a look. Let's take a look at oil to start off with. So as usual, what we do in these sessions, we'll look at different markets: oil, gold, the euro, US dollar, the pound, and stock market indices. Really, what's been going on, what levels to watch, all that sort of thing. So we'll take a look at those. But I thought oil was interesting. I've started off with an hourly chart here, and just really the move we've seen since yesterday's lows. So since about 2 o'clock yesterday afternoon. So just to recap on what it's done, we were looking at this. Was it a week ago? So a week ago, it hit its best levels very briefly, the price of oil, since about late November, but it couldn't hang on to it. So for much of last week and into yesterday, the price of oil was in decline. So we'd seen the price drop from, where was it? Just shy of $56 a barrel. Yesterday, it traded as low as 51.5. But what's interesting, it was weak going into yesterday. It set a new low for that down move. But today, this downtrend line that I've drawn in here, you can see what a great job it's done over the last 8 days or so in keeping any rallies from the oil price sort of under pressure. They haven't run very far, but just over the last 3 hours, we've seen this trend break out. So this is the first break of that downtrend that we've had since it's been going since last Monday, since it pushed out to those new highs. So I think that's interesting. I think the fact that it has managed to break through here. We've now broken above the highs from yesterday and also the highs from Friday. So Friday highs were about $53.30. Yesterday's highs were 53, about 1 o'clock yesterday afternoon UK time, and we've broken above them. So it's a market that today at least seems to have turned it around. So I think it makes it an interesting one for the rest of today and going in tomorrow. As I often talk about, when we see breaks like this, for me, I wouldn't necessarily want to jump on it just here, but I suppose the aggressive strategy is to be a buyer now at 53.70, and the closest I'd want my stop loss personally will be the stops under the day so far. And the low for the day so far is 52.78. So we're still talking about 100-point stop loss there. I think maybe the better trade from a risk versus reward point of view, which may or may not happen, is if we saw the market sell off a bit and hold above yesterday's lows. We'll often see markets return back to previous lows, and then we see strength come in. But it does look like we're seeing oil once again shaking off this downtrend. So I think it's an interesting one. So if assuming this downtrend is over, the logical target is for a run back to those 56, almost $56 a barrel highs. On the downside, 50, I think. So that this whole 50 to 51 area has been good support for the last month. 50 was a bit of a psychological barrier on the way up for oil, but we've seen weakness, as we've seen over the last 24 hours, down to sort of 51-ish, being a good level of support. So I think it's interesting, this morning's trade in oil, the break we're seeing. Just to take it back to the bigger picture view, just to remind ourselves, we had clearly the big sell-off from October, last year into Christmas Eve. My phone's a bit loud there. The recovery from 42 to 56, bit of a sell-off over the last week. And I think it's going to be interesting now for the rest of this week. Is this oil about to make another run-up to 56? So let's see what happens. But I think levels to watch. If we do see it under some pressure, the lows from yesterday, 51.50 near enough. So I think this whole 51.50 to 52 area, if we saw it push back to here and strength come in, to me that looks like maybe the better buying opportunity. Okay, let's see what happens. We've got this afternoon to go, then we've got the payrolls tomorrow. We're doing this zero spread thing tomorrow, so let's see what happens. But an interesting market now for the rest of the week, I think, following the break. Okay, so that's crude oil. Let's take a look at gold. I've been doing these live sessions for a while now, and I've been bullish on golds since I think probably, I don't know, October last year maybe. Just really on this recovery, on the recovery that continues to move higher. It's been a bit of a flat month so far. That big recovery for gold off those August lows remains intact. Even if it trades back to 1250, it doesn't trade that recovery. So I still think that 2019 could be an interesting market for the gold price, because it got hit so quite heavily from April till August last year. We've got the recovery going on. The recovery is still going strong. We're not getting much from the RSIs at the moment. We did go overbought here, which coincided with these highs here, so it worked pretty well there. But it's pretty much in the middle at the moment. Well, 58% at the moment on the RSI. The MACD gave us a sell signal about there. The market has not really done much since then, and we are seeing sort of 1300. Let's flip it over to an hourly chart. So here we go. So we have seen over the last the last 5 or 6 days or so, weakness down towards 1300. Seen the buyers come back in, but interestingly, the highs from sort of about a week ago, around about 1317, 1318. The market's not making much progress through there. So for me, I think it's quite difficult one in the short term. The bigger picture, the recovery is still intact, but in the short term, it's a bit sideways, isn't it? So maybe we'll see it push a bit higher from here and run out of steam. So I think the short term levels to watch, 1317 to 1320 an ounce. It's currently trading at just below 1314. But if it drifts back to the low 1300s, just watch to see if the buyers come back in. So at the moment, maybe a little bit in the middle of the recent range, but that bigger picture for gold is still very much up. But arguably the better entry from a trading point of view, a longer term trading point of view, would be a sell off a bit deeper below 1300. Okay, so an interesting one to keep an eye on, but for me, not as interesting as oil at the moment. Let's take a look at the currencies, because the pound, first of all, clearly, still very much, Brexit driven. What's going on, or rather, what isn't going on with Brexit, and it's continues to slip, from these highs at 132. But it's interesting where it is now. I remember we were doing the session back in January when we had that big vote that Theresa May, the UK Prime Minister, lost. And this is let me just pull this across. So this was the day of the vote. So it was the 15th of Jan. Was it a Monday or was it a Tuesday? Whatever it was, I think it was a Tuesday. And the market had sold off into the vote. Then she suffered that massive defeat on her revisions to the Brexit bill. But the market liked it because it thought, well, maybe we're not going to have a no-deal Brexit. Maybe Brexit gets delayed, whatever. We saw the market jump back really sharply. And then after that, 128.25 ended up being the floor. So let's just bring ourselves up to date to where we are now. And we're edging back to that level. So that's why I think it's interesting down here, the pound. Let's just pick up on that. So we're looking at these old lows really from back here. So the ones immediately after the vote, it's been the lowest the pound has been for the last month. So it's still weak going into today. It's still weak. It did push a bit lower yesterday, below the lows from the end of last week. So the lows at the end of last week were about 128.50, 128.55. Pushed a bit lower yesterday, pushed lower this morning. But I think what's interesting, even though it is nudging its way below those lows from the end of last week, we're not really seeing much in the way of sort of fresh selling pressure. So I think it's interesting. I think we're all familiar with breakout trades and that sort of thing, where a big level breaks. The expectation is for some momentum to build behind that break. If it breaks up, we expect the market to move higher. If it breaks down, we expect the market to move lower. But if we just highlight the lows from the end of last week, the markets come into this week, yesterday, pushed a bit lower, but recovered pretty quickly off those lows. This morning, between 8 and 9 a.m., again got pushed lower, but again we've seen it bounce back off those lows. So I think it's an interesting one to watch down here because it was such a big level towards the end of January, second half of January, 128.20 ish. Are we going to see the start of a market turnaround from here? Of course, with the Brexit negotiations, anything's possible. But I think it is an interesting one to keep an eye on. So I wouldn't necessarily want to be a buyer just yet. If we were going to pick up on a trend for the pound, maybe picking it off these levels up here, we're a long way below. Oh, if I could draw it correctly, we're a long way below that old trend that started towards the end of Jan. But 128, I think, is one to watch for the pound over the next couple of days. Let's see what happens. Let's have a look at the euro. Let's pick up on this one. Let's just get at that. Let's start off with a bigger picture view on the euro, because I think I don't know, it's been a bit frustrating, I think, the euro over the last couple of months, because it looks like it's starting recoveries, and you can see they just get knocked back really quickly. We had that one that started a couple of weeks ago off the back of the US interest rate decision. And again, it's been knocked back down. But I think there's some really obvious big levels to pick up on euro, US dollar. Maybe we'll have a look at euro sterling in a minute as well. We'll take the dollar out of the equation. So we had the lows for last year for the euro, middle of November, just ahead of 112.20. The market bounced back, and then 112.70 emerged as support. Today, the euro has hit about 112.50, 112.60. So we've traded down to the lowest levels since late November. So to put it bluntly, if the euro is going to rally from anywhere, then we are here. And there's the obvious trade. If you thought the euro US dollar was going to rally from here, is to be a buyer with a stop loss the other side of 112, the lows from November last week. So if we break below sort of 112.20, that's going to be the lowest it's been since June 2017. So we're on 18-month plus lows if it breaks below 112.20. So the euro is really interesting. That the dollar has made this significant comeback over the last week. Clearly, that is putting pressure on the euro. Looking at the RSI, for fans of the squiggles, we went very briefly oversold yesterday on the RSI. I think hopefully you can see that on the chart there. So oversold down here on the RSI. So again, suggesting if we are going to see a rally, then this is as good a place as any to start from. But I think euro US dollar is an interesting one. So I think, is there any urgency to be a buyer at the moment? Well, in the past we have seen, if you look at these daily candles, we've seen pretty sharp turnarounds from here. Yeah, so when it has dribbled down, it hasn't hung around. Yeah, at the moment we're not seeing that. We're seeing a bit of an update so far after pushing a little bit lower. But I think euro US dollar is a really interesting one, Danny. Let's have a look at the hourlies, see what they look like. There we go. That was a really, you can see this really tight downtrend on the hourly charts from the beginning of Feb. Let's just let's pick up on that and see what that looks like. So that looks, there we go, something like that, maybe. So we're right coming up to that downtrend line, which is pretty much on 113 at the moment. So I think it's a really interesting market to watch over the next 24 hours to see how this performs. But if it's going to bounce from anywhere, then we are here. And 112.20, the big support to watch on euro US dollar. So we'll come back to it tomorrow and see how it's done. What we were going to look at now, euro sterling, I said, didn't we? Let's have a look at euro GBP. Have I got that on my list? Yeah, let's have a look at that. So euro sterling. So it had been, we've looked at this now and again in the past, and it's been for much of the last 15 months or so really stuck in a range with 86 as the base and sort of 90 to 91.20 as the highs, and it's played out again. We saw the euro against the pound third week of Jan slip back to 86. Since then we've seen euro strength and a bit more pound weakness. So that there's nothing much has changed. So someone's asked, how does Brexit affect euro sterling? And I think you can see it's just been pretty directionless for the best part of 18 months now, because of course a messy Brexit doesn't just affect the UK economy. We've seen the numbers in recent weeks from continental Europe. We've got Italy went into a recession a couple of weeks ago. I think it's their third recession in the last decade. And Germany, their economic growth has been the lowest since 2013. I saw a bit. I've been away for a couple of days, but I saw some news about the job losses that are going to affect the German economy in the car sector. Again, if there's a messy Brexit. So clearly Brexit impacts both the euro and the pound, and not in a good way. Which is why I think we're seeing this pretty much a tug of war between these two currencies and no real direction over the last 18 months. Yeah, but 86 is the floor, 91 on a bit is the top, and nothing's really changed for euro sterling. Okay, let's take a look at stock markets. What should we start with? Let's start with the Dow Jones, because I can see we had over the last, or this week so far, we've seen something of a bounce back in these markets. So let's just pick this up. Let's just get rid of some of this old stuff off here. Let's just take this off and see where we are. So again, it's been an incredible couple of months, 2 or 3 months in stock markets. We have had this, excuse me, this V-shaped recovery. So the markets got beginning of December, the Dow was above 26,000. By Christmas Eve, it was below 22,000. So more than a 4,000 point drop in the Dow during December. Absolute handbrake turn by stock markets since then. Sold off a bit over the end of last week, but have bounced back. I suppose you could draw a trend line in, looking something like that. So arguably starting to break out about a week ago out of this correction. Considering the size of the move, looking very overbought. If you look like traditional measures, like a 10-day RSI, looking pretty overbought. The MACD just a couple of days ago hooked over to give a sell signal. When was the last time we had a sell signal? Probably back here, and it was the beginning of October when markets did start falling. But for now, at least, I think that the trends are still strong. So let's flip this over to an hourlies and just look at some of the levels. And we had the move. What was the end of last week? February the 8th. So we had the move last Friday, 4 o'clock, between 4 and 5. The Dow traded as low as below 24,900. But we've bounced back about 300 points since then. We had a strong day yesterday, and so far, at least in the overnight market, it's continued in today. So it does look, like when we were looking at the price of oil earlier on, it does look as if whatever the correction was, we're seeing US markets over the last couple of days starting to break out of it. So I think it's interesting. So we had this is what I was talking about when I was talking about oil. We had the break yesterday of that downtrend, which I haven't drawn very well. The market pushed a bit higher, but then sold off, and then the buyers came back in and lifted it. That's the sort of thing I'd be looking for in oil after that break. Do we see a sell-off and buyers come back in? But going into today, US markets at the moment at least look pretty strong. So I think the levels to watch into today for the Dow, if we did see any weakness, watch how it. Maybe if I make this a 5-minute chart, will be clearer. Do we get a sell-off towards yesterday's low? So yesterday's low was quite late in the session. It was about 7:45 UK time. So just over an hour left to go into the session. The Dow sold off almost 25,000, bang on. What was the low? 25,001. That was the low yesterday for our Dow market anyway. So I think, again, we're trading at 20. So we're 200 points above yesterday's low. Let's see what happens today. If we do see the market come under some pressure and move back to the low 25,000s, starts to look like a buying opportunity. But I think that the strength we've seen this week at least, does look like as if we've shaken off the correction that hung around these markets for the second half of last year. So it's interesting. So at the moment, assuming this correction's over, the obvious target is for a run back up to these old highs above 25,400. So I think we could see an interesting couple of days for stock markets. Let's bring it back to Europe. We'll have a look at the DAX. I mean, very volatile trading. I think in the German index over the last couple of weeks or so. So we were looking when we were looking this last week. We had the breakout to 11,400, the highest the DAX had been since December. So we saw pretty much a 2-month high on the DAX. Completely reversed it then over the next couple of days and briefly traded below 11,000. The DAX is a really popular market because it's so volatile. But I think with some of the crazy moves we see, I don't think it's the easiest one to trade, or it hasn't been for me anyway, over the last week or so. So if we pick up on the big levels on the hourly charts, I think we're looking at maybe these lows from back here, from whenever that was, second week of Jan, around about 10,775. The market turned around, I'm assuming yesterday. No, actually that was Friday. So the low in the DAX was Friday, 10,860. Bit of a sideways day yesterday, but it's gapped higher today as we've seen US markets stronger overnight. So I don't know. I think things are much clearer on the Dow rather than the DAX at the moment. But again, the DAX, if we saw it under pressure, levels to watch it 10,950 to 11,000, the lows from yesterday. But I think maybe a bit of messy trading over the last couple of days. We'll wrap it up by looking at the Footsie. How are we doing for time? Oh, we're okay for time. But I'll have a look at the Footsie 100. So let's flip this over to a daily chart. So again, the weakness in the pound will have helped the Footsie, the UK's index, over the last couple of weeks or so. So because as the pound drops in value, because so many of the constituents of the Footsie make their money in dollars, a weaker pound flatters their P&L. So we've seen this correction in the Footsie been going on since August last year, broken out over the last week or so. But this level that I think we was talking about last week, 7,200 is I think the big one to watch. The early November highs couldn't get through, has a go in December, still can't get through, and so far at least in February it continues to stop any rallies. If we look at the RSIs, we went overbought on that run up to 7,200. Still just a little bit below overbought at the moment. So let's see. I think 7,200 could well be the trigger for Footsie. I think if it can break there, then we can start looking at a much deeper, much stronger recovery on the upside. But you can see, I flip this over to the hourly chart. Had to go February the 5th, February the 6th, February the 7th. And again earlier today, 9 o'clock this morning, up at 71.75. So 7,200 is proving to be something of a barrier. But I think again, it's the US markets, the Dow, the S&P, and the Nasdaq are going to be the ones to watch. So for me, I think the next 24 hours, there is a lot to watch on all sorts of different time frames. Oil, because it's broken out of that weakness for the last week. The pound, because it's back towards 128. which had been a big level, the euro, because it's just above its lows from November last year, and the Dow, because it looks like, or US markets look like this week at least, they've shaken off that weakness. I think there's plenty to keep an eye on. Someone's asking for the Chinese Yuan renminbi. I don't think we ever looked at that, have we? Do we cover it? US dollar, there we go. US dollar against the Chinese currency. There we go. So I must admit, I don't think I've looked at this in a very long time, but let's take a look. So it's a bit of an odd market, as you can see by some of the candles. So not the most liquid market in the world. So this is dollar against the yuan. So clearly, when the chart's going up, we're seeing US dollar strength over the last 3 months or so. We've seen US dollar weakness, maybe fueled by the potential trade war between these two countries. You'd have to say, or I'd have to say, at the moment, I'd still be tempted to be a seller of the US dollar against the Chinese currency. At the moment, we are having something of a, for fans of candlestick patterns, what's going on today. We had this up day yesterday. Hopefully you can see that. I'll magnify it a bit. This up day yesterday, and the market has turned it around and pushed through more than 50% of yesterday's range. This is known as a dark cloud cover. So it can often suggest that maybe sentiment is shifting. So again, if you were trading that trend on the dollar against the yuan, you'd be, arguably, if we have a bearish finish today, it would be a seller with stop losses up above at least, 6.820, maybe even higher, assuming that downtrend is going to continue. But that's an interesting one that it is performing at the moment, as you'd expect a downtrend to continue. Pushes lower, rallies a bit, pushes to new lows, rallies, pushes to new lows, rallies. So the expectation would be for a drop below 6.7. Let's see what happens. The euro against the Norwegian kroner. I'm not sure if that's one we cover. Oh, yeah, it is. There we go. Euro Norwegian kroner. Let's take a look at that. Let's bring that one up. A bit. I mean, if we looked at the last, what's this? The last year and a bit, it's pretty sideways, isn't it? I mean, it's not quite as sideways as something like euro sterling, but we've got a floor at 9.4 on euro Norwegian kroner and a bit of a ceiling. Well, just around about 10, isn't it? It pushes just up towards 10. So where €1 buys 10 kroner. Is it krona? I should know. Whatever. The sellers come back in and the euro's being viewed as overvalued. And at the moment, it looks like it's been in this downtrend, broken out. I think what will be interesting, if it sells off from here, do we get buyers coming back in for the euro ahead of the previous low, around about 9.6? So at the moment, we've got really mixed signals down here. Overbought on the RSI, but the MACD gave a buy signal about a week ago. Yeah, so it's a pretty mixed thingamajiggy. Personally, I wouldn't want to do anything at the moment, but if it sells off maybe below 9.7, do we see buyers coming back in and have another push at 10? But the last year, bit of a sideways range, I think that one. What countries, if any, have strong DR economies? What do you mean by DR economy? Do you mean like just a strong economies in general? I think it's interesting at the moment because things have changed, haven't they? I think we've got, if you look at the European economies, so much we're all waiting to see what Brexit ends up looking like, but on both sides of the channel. The US economy, if you look at the job numbers, that's still strong, but again, there are concerns here because of the trade wars, the potential trade wars. So I think there's an awful lot of uncertainty for the global economy today, compared to where we were a year ago. So I think it's going to be a bit more of a difficult year, but we'll see. But like I say, I think the immediate markets to watch, stock markets this afternoon. Let's see how they perform. But any weakness for the Dow down to 25,000 could be a buying opportunity. Oil, because we've broken out the downtrend, and the euro against the dollar and the pound against the dollar, because we're near sort of big, medium to long-term levels. We will wrap things up there. So we caught up with everything since last Thursday. We'll do it all again tomorrow. So do it again tomorrow lunchtime. 12:30. So again, if you've never seen these before, if you just subscribe by clicking the subscribe thing and the alarm bell next to it, you get a push off YouTube when we go live. But we'll go live at 12:30 tomorrow and see what things look like then. Okay, thanks for coming along. I do enjoy doing these, sort of just rattling through the market, see what's happening, and hopefully you can make it tomorrow.